Hi, I'm Chad Huebener.
And I'm Sara Huebener with Edina Realty, and today we are going to be talking about a shift in our market. If you've been listening to the radio or watching anything on TV, you've probably heard that we are starting to see a little shift in the market. And a lot of people are wondering, is that true? And is the market going to crash? Well, first of all, we're going to take the word crash out of the equation and focus just on a shift, because there's just far too few homes available for a crash to occur at this time. We just have way too low of inventory. But we most definitely are seeing a shift occur in our local market.
So one of the biggest factors that we're seeing in a shifting market is the interest rates. We're right before Memorial Day here in 2022, seeing the rates at about 5.5, and that's about a 1.5 higher than it was just 2 months ago. Mm-hmm. So that's a significant change for buyers and sellers in this market. The affordability is pretty dramatic in certain price points for certain buyers of what you're looking for. So that's kind of the biggest factor, let alone some of the other economic factors that we're seeing with inflation and supply chain issues. Those are big factors that are happening in our marketplace right now, especially building too. Mm-hmm. We're talking to a lot of different builders that are having issues getting garage doors or certain refrigerators, and that's impacting people's close times and in the process of building.
Now that said, I think we are continuing to see very strong buyer activity from buyers that have healthy down payments, 10% down, 20% down. Those buyers are still out in the market. They're still very active. They are still out looking at homes in all price points. I think the biggest area where we've maybe seen a decline in buyer activity was more the entry-level buyer that was coming in with a 3% down payment, and they were also being qualified at that very low 3+% interest rate. That there was some incredible home affordability for those buyers and opportunities to get into the market at that time, and some of those buyers have taken a step back. So it's mostly in that regard.
Yeah, and just some example too, even from some of our preferred lenders that we talk to, is first there are buyers that are not affected by interest rate, and that's not necessarily financial, but just they're wanting to buy a new house. And then there are some buyers that are dropping out of the market just because of the interest rate. Mm-hmm. Depending on your loan program and what your down payment is, there's the difference between a 5.5 rate and a 4% rate can be $50,000 to $75,000 per buyer. So that affects you quite a bit. If you're looking at $500,000 houses, then all of a sudden you can look at $425,000 houses. That's a different house in today's market. So that has an effect as well.
And then lastly, we'll touch on the showing activity. We are still seeing pretty active showing activity, and we are still seeing multiple offers on properties. So in that regard, the market is still strong. I would say we are seeing fewer showings than we were 2 months ago, where 2 months ago the amount of traffic in a house would really tie up the cul-de-sac. Right now it seems to be a little bit more of a balanced level of traffic when a home goes directly on the market. That said, we are still in a seller's market, but I would say some of the craze has died down a little bit.
Yeah, hence shifting versus crash.
Yes.
So that's kind of the biggest thing we want to take away from this to our video today is things are changing, not necessarily in pricing or anything, but they're shifting.
Yeah. We hope you enjoyed our video today, and hopefully it was informative. If we can answer any questions for you, please reach out anytime. Thanks for watching and have a great day.